What is up, ladies and gentlemen, and welcome to another episode of Casual Cash, my financial journal. Today, it's always exciting because we have a new investment and we're going to talk about it. So in the investment world, at least for me, the two main ways to invest are for cash flow and for capital appreciation. Cash flow being one of my favorites. It's probably my first passion when it comes to investing. Getting money in on a constant basis, on a monthly or annual or quarterly basis, so you can grow your cash flow. This particular investment, however, is for capital appreciation. Now, what's the reason for that? Why do we invest? It's to make money, right? So if you have a cash flow investment that's bringing you, let's say 4, 5, 6, 7% per year, but you have a capital appreciation investment that's going to bring you 10%, 20%, are you losing money by going with cash flow when you could be making more on capital appreciation? And that's where the balance comes in. Yes, we can focus on cash flow, we can focus on capital appreciation, but you also have to go where there's opportunities. And opportunity is what I think I found with this one. So what do we invest in today? We invested in African Rainbow Capital Investments, or ARC for short. Now, if you know African Rainbow Capital, you might know its CEO and its founder and its funder, Patrice Motsepe. Now, where I live in South Africa, Patrice Motsepe is one of the richest people in the country. He's a billionaire. He even helped fund the COVID relief scheme when we came out. I think it was R1 billion that he donated. He owns soccer teams, he owns mines, he owns a lot of things. Later in his life, he decided to consolidate his wealth and he opened up the ARC Fund, African Rainbow Capital Investments. And through that, he listed on the JSE, and that's what we're looking at and what we purchased today. Now, why did we purchase it? I have known about African Rainbow Capital since it listed, and it's been on my mind. It's something that I wasn't sure about purchasing in the beginning. It listed at 800 Rand a share. I almost got it, but I wasn't sure what I was going to do, and thank God I didn't. Let me show you this graph. As you can see, it started out at around 800 Rand per share, and very quickly and very consistently, it depreciated and it went down from there. So thank God I didn't purchase at that time. But why am I looking at it now? ARC has two main types of investments, and it is an investment holding company. On one side, it's got what we can say as blue chips. So big corporate stable companies. We're talking about shares in Alexander Forbes, in Sanlam. It has a property portfolio. These kind of things are big, they're blue chip, they're stable. On the other side of its investments, it has what I would call the more entrepreneurial, the startup side, which has got very high growth potential, a bit more risk, of course, but that's where I like this business. It has two main ones, which is Rain, which is an internet service provider, and it has Tyme Bank. Now, in the last 20 years, there's only been about 3 or 4 banks that have been able to get a banking license in South Africa. Previously, it's been dominated by the major 4 banks, and it needed some competition. So Tyme Bank and Rain are predominantly digital companies. They don't have stores. They don't really have a lot of staff overhead. Nearly everything is fully digital. Rain, you can get unlimited 5G Wi-Fi, which is quite rare here, for an affordable cost. Tyme Bank, you have zero fee, well, let's say zero monthly fee banking, and a high interest rate on its savings accounts, actually 7%. I've got one of their savings accounts. For a savings account to have immediate access to your money, you don't really get higher than that, even though it's limited to 100,000 Rand. So those two businesses have been growing exponentially 2 times, 3 times over the last few years. And Tyme Bank has about 5 million customers now, about 10% of the population. So its asset value has been growing, but its share price, for whatever reason, was going down. It's hard to know. I think the business still needed to get its feet under it. The markets didn't take to it for whatever reason. But I think I've been looking for a time to get in, an opportunity, an opening, and this was it. So I never like to be too early on investment. I never like to be too late. No one does. But I also don't try and time the bottom or the top. I think people who try that, you can have all the calculators and knowledge in the world. People tend to not get it right. It's very rare that they do. What I like to do is get in just after the bottom where you can see an upward trend and get out just after it's topped out so that you know where you are and you're certain of the bottom of the top. Yes, you miss out some of the meat, you miss out some of the profits, but that's fine. I'll take that for a bit of security. But what you can see on the graph here is that it has definitely bottomed out and not just turned around, but it's showing consistent positive trajectory growth. So I know that this is something that looks to be sustainable, and if you look at the financial result, it's doing incredibly well. This is something that I believe will continue to appreciate at a rapid rate, at a good rate in the next years to come. So I don't like to invest in South Africa recently. I think the economy is really under a lot of strain, and it's just an uphill battle. I prefer offshore at the moment. But this is an opportunity I've been waiting for, and I think will prove some really good results. So I've put in 2,000 Rand into shares for African Rainbow Capital, or ARC. I'm looking at about 2 to 5 years for this investment to mature. But keep in mind, I'm not going to throw away free money. If the time comes 2 years, 5 years, and it's still doing well, let's continue to hold it. The only reason to move money is if you think it's going to have a better result somewhere else. And if it's still strong, it's still doing well, might as well keep it. Why not? But for the meantime, I'm looking at 2 to 5 years, make some profit on this. And when the time is right, sell it and maybe put it into something else. I just think this is an opportunity that I want to take up. So that's it for today's episode, guys. Thank you for tuning in. If you enjoyed the video, if you like the information, please like the video. But more so than that, if you want to stick around and subscribe to the channel, everything I do in my investments, my buying, my selling, my profits and my losses, and everything in between is going to be here. So please feel free to stick around, and I hope that I see you again next time for whatever comes next in our investment journey here on Casual Cash. But until then, I'll see you guys next time. Cheers.